Okay, so now let's start with the first part, which is called as the economic indicators that you need to look when you decide whether to invest in that country or not. The first and the most important indicator is a GDP growth rate. Now, what do you mean by GDP? GDP is nothing but a gross domestic product. What is gross domestic product? Is nothing but the value of goods, okay, the value of goods and services which are produced within the boundaries of a country is called as a gross domestic product. So all the goods, all the services which we produced in our country, okay, will be added up and will form a part of which is called as a gross domestic product. Then what do you mean by growth? Growth means when we compare it to quarter or year to year. Let's say, for example, our GDP is the gross domestic product of the value of goods and services which are produced within the country, let's say is 100 rupees. Okay. And in the next year, it has increased from 100 rupees to 110 rupees. Okay. It is increased from 100 to 110 rupees. We are saying that our economy is growing at what rate? 10% growth rate, right? Because it has grown from 100 to 110. The value have grown from 100 to 110. So we are saying that our GDP is growing at what rate? 10%, right? So as you all know that because of the COVID situation, our GDP has gone to negative in the last year, like in 2020-21, our GDP has fallen at minus 9% or something, right? So that means what? It means that GDP at value of goods and value of goods and services which is produced in 2019-20, it might be 100. Okay, it has fallen from 100 to 90. Okay, so therefore it has now fallen from 100 to 90 rupees. So in 2020-21, the value of goods and services which is produced in a country is not 100 or not 110, but it has been declined from 100 to 90 rupees. So we are saying that our GDP has fallen from by 10%, that is by 9.5% or something, a negative. So when we say a negative GDP, okay, when we say negative GDP, that means our economy has gone into a recession stage. Now everyone knows, not just in India, but all over the world, except few countries, all over the world have a GDP of negative, right? Because of the COVID situation. So when we say negative, that means our economy is in recession. Now, when we say next year, okay, when we say next year our GDP will grow by 11 to 12%, or let's say 14%, that means what we are saying is that from our base is now get lower, right? From 100 to 90. So now we are comparing from that 90 only, not from 100. So we are comparing our GDP now from 90. So now when we say our GDP is growing by 14% to the next year, or 11% to the next year, that means it will now increase from 90 to 99 or to 100. That means it will come to again to that level of 2019 to 100. It's not a great achievement, right? But it is now recovering, right? It is recovering from the COVID crisis. So when we say our economy will grow or GDP will grow by 10 or 12 or 14% next year, that means its base is already lowered, right? To 90. From 90, we are going to compare our value of goods and services produced. So GDP is nothing but what? How much value that the country has produced during the period, during a year or during a quarter is what GDP defines. And growth means how it has increased or declined. So when GDP declines, it means that the economy is in recession. There is not enough goods and services which are being produced in a country because there is no consumption, right? So that's how the GDP has been calculated. So when the economy has a good GDP, it has been said that it has been a good country to invest into, right? Then second one is, so higher the GDP growth rate, it will be better for the investor to invest into that country, right? So higher, it will be always better, and because the market will increase, right? Because the value of the stocks will increase. Why it will increase? Because the GDP is growing, because the value of goods and services which are producing in that country is growing. Okay, so that it has an effect on the markets as well. So whenever you see there is an announcement of GDP growing or GDP declining, there is an impact on the markets as well. So higher the GDP, better for the markets.